Good morning, traders. It's the 24th of November, Thanksgiving Day in the US. I'm Joe Neighbor from Signal Center, and today we'll be running through the latest on the headlines and the charts to set you up for the trading day. Steve should be along shortly, but if not, I'll carry on and do my best to get through as much as I can. As always, if anybody wants to get involved in the stream, please feel free to post your comments up either on YouTube or via TradingView. If you're looking at any charts and you want us to cover them from a technical perspective, then let us know what they are and we will try and cover them for you. Okay, so latest headlines. First of all, let's get into that. So the Eurozone PMI data remains in contraction. The manufacturing index recovered to a 2-month high of 47.3 for November, from a previous reading of 46.4, and that was above the consensus forecast of 46. The services index was unchanged at 48.6 and also slightly stronger than the market expectations. Overall, when we remain below that 50 level, it does mean we're in contraction territory. We've been there now for 5 months, and the overall business confidence remained very fragile. Good morning, Steve.
Good morning.
No change in the UK business confidence, however. According to the flash data yesterday, the PMI manufacturing index was unchanged at 46.2 for November, but yet again above the consensus forecast of 45.7. Overall business confidence recovered slightly amid an easing of political uncertainty, but it was still the second weakest reading on record, with notable pessimism in the manufacturing sector. In terms of the US, they also had their flash data out, and their index declined to a 30-month low of 47.6 for November from a previous reading of 50.4 and well below the consensus forecast of 50. Excluding the initial pandemic period, this was the sharpest decline in new orders since 2009, and there was significant easing of inflation pressures, with output prices increasing at the slowest rate for just over 2 years. The Fed minutes yesterday, that backed slower rates of rate hikes. The minutes yesterday recorded that a substantial majority of policymakers agreed that it would be likely to be appropriate to slow the pace of rate hikes soon. Some members also expressed concerns over the risk of financial stability if the central bank pushed ahead with strong rate increases. Although there were some concerns over inflation trends, market considered the overall tone slightly more dovish than expected, and as a result, we did see a bit of a rally in risk assets. The US dollar lost ground on this data yesterday, again supporting the fact that maybe we saw some relief in risk assets, people coming out of the US dollar in favor of riskier assets. And yesterday we also had some news with regards to the independence referendum number 2 from the Scottish Parliament. The UK Supreme Court ruled that the Scottish Parliament did not have the authority to hold a second independence referendum without approval of the Westminster government. So not the outcome that the Scottish National Party wanted, but it looks like there's no real prospect of a referendum next year. So it is the US Thanksgiving holiday today and Black Friday tomorrow. So that means that markets might be a little bit quieter than usual. We may see a little less price action or volatility, certainly from the US markets. But often when you get these periods of little to no news, it can be a pretty good period for markets where they tend to kind of drift in the prevailing direction, which at the moment is higher, certainly on the equity market. So maybe that will continue. Steve, let's take a look at some charts. Are you okay to kick us off with Bitcoin?
Yeah, sure, mate. Don't know what I was doing. I was just worrying my way around emails and things, and sort of didn't get the alert up. Never mind. So Bitcoin, yeah, we've had a nice little rally in Bitcoin this week. Joe, you've been away, you missed most of it, but you can see sort of like Tuesday and Wednesday's price action is pretty positive. Even yesterday, we sort of this morning we've had a little bit of a push higher, retraced at the moment, got up to 16,783. I've stuck this band of resistance. This is where I sort of believe we really need to push through this level if we're going to see further upside. And even then, we've got 17,600 as a. I'll make that a red line because that to highlight the further resistance there. That was the swing low from the June spike lower that we got when we first broke through the 20,000 level. And again, 20,000 all the way up to there, all the way up to 22.5. We've got resistance, resistance, resistance. So it feels like this is like a small pullback within the overall bearish trend. I don't think much is going to change. So looking at today's price action, just from an intraday level, 16,800 all the way up to 17,200 should really cap gains today. On the downside, if we can manage to get below yesterday's low, 16,150, we could open up a bit of downside. Let's get rid of this upward trending resistance support here, and really sort of like the focus is on the 15,479 level, which was the spike low on Monday. That's the lowest level we have been since, let's go all the way back to around about November 2020. So 2 years ago we were down at these levels. So overall, still remain bearish on all the cryptocurrencies. There's not one that really stands out that I'm feeling good about, and further downside is expected. It's a slow grind lower. Every time we seem to get this risk rallies, crypto has a little bit of a pullback, but that's about it. Nothing much more than that.
Cool.
I could take a look at. I was going to say, could take a look at gold, or what you think? Yeah. So gold had the last couple of days of price action has been pretty good. We did get a spike lower yesterday through the support. I've got this band of support between 1730 and 35, which is made up of previous resistance levels. We spiked through it last Thursday when we got that real aggressive push higher with a big dollar sell-off, and we've maintained levels above here over the last 3 days, forming a morning doji star formation. And we're kicking on this morning as well. We've been up to 1757.5 this morning, so looking pretty positive on gold overall. The upside resistance is expected to be around about the 38.2% fib. That's at 1789. The swing high that we got was around 1786, and between 1800 and 1810, again further resistance from all the way back in August, where we got up to those heights of 1808, and then continued to move lower. Overall, we formed a double bottom formation. So if you're looking at this from a more medium term perspective, we've broken through the neckline, which comes in at 1731. And I think we've highlighted that double bottom formation on one of the charts. If we haven't, let's highlight it now. So we've got this, we can do this with the Fibonacci trend-based fib extension tool. There we go. 1844 is the measured move target of that double bottom formation. So really sort of like got our eyes on that, but it does have a lot of resistance to get through. Now, if the dollar continues to be under pressure, to be pressured over the coming days and weeks, then there is a possibility we will get up to there. But it still has to get through this solid resistance all the way up to 1808. So yeah, on the short-term basis, feeling quite bullish on this. 1728, 1727, 28 is a support. A breakthrough there maybe opens up a move down towards the previous support level as well, 1690. Silver, similar sort of price action. Obviously in silver, we got this inverse head and shoulders formation that it looks like we're retesting the neckline and bouncing off it. Again, morning star formation. We're still in this band of resistance as well. To clear this, we've got to get above $22.50. And then we're well on our way to the measured move target of 24.92. On copper, copper's also turned round. This inverted hammer is a clear bullish sign, and we had a positive day yesterday. Primarily, we've got resistance here at 367. A break above there opens up the upside, and support really coming in the form of Monday's swing low, which was 355. So again, feels like we've got this bottoming formation taking place in copper. Quick look at crude oil. Now, oil inventories yesterday obviously wasn't very good, because we've sort of seen a big reversal in fortunes for oil. We had this price action from Monday, which posted a long-legged doji, or a like bullish hammer type formation from the previous swing low. So this is although it's only a potential double bottom because we have to get above the neckline, which is all the way up at 92.27, and we've got further resistance coming in a potential downward trending resistance line here, just around the same levels. The reversal yesterday really sort of like puts the focus back onto the lows around about the 75.34 to $76 on the WTI crude oil. So it's key for that to hold to give this the real chance it needs and build a bit more momentum into breaking that neckline. Otherwise, we're back under pressure on crude oil. Brent crude oil, same sort of formation, a bit of a cleaner potential double bottom, but obviously we got the reversal yesterday, bearish outside day, taking the previous 2 days of positive move out. And finally, on the commodity side, we've got a shooting star candle yesterday formed in natural gas, and today we're on the back foot also, so further downside, really targeting now price action trying to break the 740 level. On above, we got up to 810 yesterday at the best. But that's and this inverse head and shoulders, which looked pretty good and well on its way, is now going to retest this neckline, which comes in around about 736. A retest here, then forward momentum potentially targets a measured move towards 935 on natural gas. So that's about it. And there, I don't know if there's anyone wants me to take a look at anything else, commodity wise or crypto wise.
No comments. Looks like you've done a pretty good job there, Steve. So thank you very much for that. So let's take a look at some FX markets then. Let's start off with the dollar index. And as we would expect, given what Steve's just gone through in the commodities, we have seen a bit of a pullback on the dollar index. So obviously we've had this long-term uptrend, which has been in place for some time. Now we've completed what looks to be some sort of top pattern. We saw a breakdown through the major support at 107.58. Prices getting all the way down to lows of 105.34. And then we've seen a nice rally to retest that newly formed resistance, and it's done a pretty good job. So from a technical perspective, this is trading really neatly. We saw the rally into this level, which proved to be a very good opportunity to reload on the sells or get out of any longs if you had any. And then prices have continued to move lower. Yesterday, a really large red candle that come off the back of the dovish speeches or minutes from the Fed. So maybe what we've done here is form some sort of continuation pattern, maybe some sort of pennant or wedge, and prices look to have broken down from that and look to be heading lower. The next level of support is the 38.2% fib level, which is at 105.13. So looking really for a test of that. We've also got the swing low from Tuesday, the 15th of November, which is at 105.34, as we just mentioned. And then below that, potentially these lows here from back in August, which come in at 104.63. So very much on the back foot for now, which is going to be breathing some fresh life into the other dollar majors. So let's look at Euro US dollar. That's breaking out above resistance yet again at 103.48. Again, we could say there's potentially some sort of continuation pattern been formed here. We're breaking out of that and look to be moving higher, heading towards this 38.2% fib level at 106.10. We've got to take out the previous swing high from Tuesday, the 15th of November. That's at 104.81. So getting above that would suggest that prices are going to continue higher up to the measured move of this bottom pattern as well, which is around 106.52. So looking like it's on the front foot and we could see higher prices. Taking a look at cable, we can see that that is moving higher. I'm not sure where all my annotations have gone. Hopefully they'll come back up shortly, or maybe I've cleared them all. But it looks as though that's taken out, well, definitely taken out the highs from the 15th of November there, and moving freshly higher to the upside. And yeah, no signs of that slowing down either. In terms of next levels to target, 122.93 would be the obvious level based on previous price structure. Haven't got any fib levels here to target, so let's just get those redrawn on, see if there's anything that marries up. 61.8% fib is at 124.52. Let's see if there's a 50% closer by that we can maybe look to target as well. So we're actually through that, trying to take that out at the moment. So that's quite pivotal as well. If we can get above that, hold above it, then that looks pretty strong as well. Let's take a look at Aussie versus the US dollar. So we formed a really neat inverse head and shoulders here, saw the breakout through the neckline at 65.22. Prices had a minor pullback and now look to be pushing higher again. But this downtrend resistance line is still preventing prices from moving higher. And it's done that on a few occasions now over the last couple of weeks or so. So we need to see a clean break above that on a closing basis. And if we can do that, then that would indicate that we may be in for higher prices in the short to medium term. Take a look at dollar CAD. We had a really nice head and shoulders top here. We've seen a really impressive retest of the neckline. So from a technical perspective, that's exactly what we want to see. And then on Tuesday this week, we posted a bearish engulfing candle as well. Further indications that lower prices are likely to be seen. We're targeting again a move back to this 38.2% fib level at 132.24, which is also roughly the swing lows from Tuesday, 15th of November. Measured move target of the head and shoulders top comes in at 130.14, which is roughly lining up with a 50% fib level. So that would be the target area for dollar CAD, providing that this dollar weakness persists. Let's take a look at dollar Swiss. So that had a really nice bounce from this trend line that we've got here at the diagonal trend line in blue. We also had the previous swing lows here from August, which did a very good job at supporting price. We saw a bit of an attempt at rallying higher, quite an impressive move up actually, but we've unwound most of that now and we're back at that trend support line. So if we get a close below this on the daily chart, then I think that could indicate we're going to get the completion of a very large top pattern here, and we can start looking for lower prices over the short to medium term. Finally, let's look at dollar yen. So that had a pretty aggressive move down, breaking through that 145.10 support level. Then we found some support in this region here around 139.38. Seems as though we may have formed some sort of consolidation pattern and continuation pattern, and maybe breaking down through that now, indicating that lower prices are likely. The key level for me to watch would be this swing low from the 15th of November, which just highlight that there. And that comes in at 137.65. A break below that, then we can start targeting the next levels of support on the downside. So looks as though dollar weakness is likely to persist, and obviously that's going to have a pretty strong effect on other currencies linked to the US dollar. So I'll leave it there. And Steve, you can run us through some US indices, and then I'll take a look at the European ones.
Yeah, sure, mate. Let's take a look at Dow first. Dow approaching the resistance level of the spike high that we got up to on the 16th of August. And if we look back, there's obviously more resistance that we formed from this level all the way back in May this year. So that's the targeted area that prices need to get through. Now, this has been quite a nice impulsive wave, and if you're an Elliott wave theorist, then you'll be looking at this thinking, yeah, I like this a lot. Now we need a bit of a correction, so be careful around these levels. An ABC correction would just slow the move down. It's like natural in markets to have these sort of corrections. If we take this resistance seriously, we could be looking at, let's get some nice little fib levels on there. Oh, it's not giving me the fib levels, Steve. Come on. Click the right button, babe. Yeah, 38.2% fib would be a natural pullback or natural draw back to this level before kicking on in the longer run. Again, if you look at this from a long-term perspective, are we forming a serious bottom here? Even if we get a move back down to here, this could be priming for an inverse head and shoulders. But if you look back, the all-time highs aren't very far away, around about 37,000. So 3,000 points. I mean, this trades like 500 points a day, this Dow Jones. So if you take it as like, half a dozen really good days, we'll be up there. But I think there's more to come in the form of resistance, and it's going to be a tough move for this risk rally to continue. However, we have got the end of year coming up. We normally get a bit of a Santa rally that it's been coined over the years into the end of the year, and then maybe we'll get some further fallout next year when this sort of like inflation thing isn't shaken off, or the interest rates are still front and center. Still got a long way to go before we know exactly how that's going to play out. On a short-term basis, really sort of focusing on probably yesterday's low, comes in at around about 34,000. So that's a big round number. That a break below there opens up a little bit of downside, but better support comes in at 33,152 on the Dow. Nasdaq really not sort of like doing the same sort of thing. We can sort of like draw a trend line in from the all-time highs, and there that we're sort of like we still got this potential for inverse head and shoulders. The target for that, or the measured move for that, is 12,950. We've got resistance coming in, downward trending potential resistance coming in today at 12,434. But we still got to get above the 50% fib retracement, and then we run into that 61.8, 12,463 that is. So a little bit slower off the mark on the Nasdaq, and as you can see, volatility dropping off a little bit on the ranges as well. S&P has hit its target on this inverse head and shoulder. So that's looking pretty positive. Resistance coming in today at 4,044, and above that we've got the 78.6% fib 4146, which marries up with the spike high on 13th of September before we started this sell-off. So they're the real key levels to watch. A little bit of support coming in really. You've got to watch 3,900 on the S&P to the downside. A break below there opens up the downside. That's pretty much covered off the US.
Thank you, Steve. Let's take a look at Europe then. So it's a similar kind of theme, really. If we look at Euro Stoxx 50, we can see that it's had a really strong move to the upside, and the candles seem to be kind of flattening out a little bit, and we're into a pretty large band of resistance here. So we've got a number of previous lows here. We've also got a 61.8% fib level at 3954. All of which combining together around this kind of region. So I think it's going to take a fairly substantial effort to try and break through this on this current attempt. Maybe what we need to see is some sort of pullback, consolidation of price before we can actually get a break to the upside. Also, we've got Thanksgiving today as well, and Black Friday tomorrow, so it's likely that we will see very muted price action from these indices because the US guys won't be in, and they won't be giving it the drive higher that it's going to need. So yeah, into some pretty stiff resistance there. It's a similar situation. Well, not quite the same situation actually on the CAC. We've actually broken through some major resistances here. Price is holding above it, trading in a very sharp uptrend in the very short term. So whether or not that can be sustainable in the very short term remains to be seen. Personally, I think we need to see some sort of consolidation and acceptance of price above this newly formed support before we can really get behind any further rallies from here. On the DAX, again, into some pretty significant levels of resistance here. So we've got a 61.8% fib level pretty close by at 14,576. Again, really sharp move higher. So maybe prices need to pull back to somewhere in this region around 13,950 to really consolidate a little bit, build a bit of a base, and then maybe we can have an attempt at trying to break higher. But it looks as though, due to the severity or the impulsiveness of the move higher that we've seen in recent weeks, that it would be unlikely if this could sustain and continue breaking higher above resistance levels in the very short term. Finally, let's take a look at the FTSE 100. This is kind of out on its own as a bit of a strange market, as we often talk about, due to the fact that it's got all of these companies that are listed in it that generate significant amount of revenues outside of the UK, particularly in the US. As we can see here on the daily chart, trading in a very nice bullish channel. We have taken out this sequence here of lower highs. Still need to get above these levels up here at around 7578, but it's looking pretty good on the FTSE front. So as long as it remains within this channel, then yes, we may see higher prices. But again, it's been a very sharp move higher. Whether or not it can be sustained at this latest attempt remains to be seen. But all in all, they are at elevated levels, these indices, and given that we're not going to see a lot of news coming out, particularly with the US off for the next 2 days, not technically off tomorrow, but likely that they will take the extra day off and go and snap up some Black Friday bargains. So that's it for the indices. We can move it on now to the gun to the head challenge. So I haven't been around the last couple of days. So Steve's been holding the fort on his own. Just to reiterate what it is that we do here, we come up with trade ideas live on the video as if we had a gun to our head, so we don't get too much time to work out too much analysis on these particular ideas. Each of the ideas that we come up with must have stops and targets. They're all placed at market, and they will expire at 9 p.m. UK time, or when the stops or the targets are hit, and they're published up to our TradingView profile. Signal_Center. We can see Steve's trade ID yesterday, which was buying Bitcoin, which is very out of character for you, Steve.
Exactly, mate.
But the nice inverse head and shoulders there on the hourly chart, well spotted. Nice impulsive move through the neckline there, and Steve was hoping for a continuation higher. If we click the play button, we can see how that worked out. It didn't move up very well. It's certainly in a straight line, but you did hold on to the trade, and I think you were 0.3R on side.
Sounds about right.
0.46R on side yesterday, so a win's a win, and you won the day before on New Zealand dollar, US dollar as well. So
yeah,
2 in a row for you.
Now your turn.
Oh, right, okay. Got to find something now. I struggled to be honest to find anything that I really liked. So let's have a look at some charts. So I tend to go on the hourly charts with these things. I think Bitcoin was the one that really stood out. So I can see your inverse head and shoulders here, but maybe it's breaking down through a short-term uptrend here. And as we know, your bias overall is bearish on this. So let's go with the dominant trend here on Bitcoin and try and sell into this recent bout of strength. So selling at a current price of 16,522, and my stop loss is going to be above this high that we posted this morning at 2 a.m. So that's going at 16,794, and I'm going to target a move back down to these lows into this region here, and that comes in at 15,000. Let's call it 15,600 just to round it up, and that's 3.23R is my what I'm looking for today on that one. So let's see how that goes.
Nice one.
I'll get that published up right away. You got one ready?
Yeah, I'm actually going for, well, take a look at the daily chart first on crude oil. Obviously, we've got this potential for a double bottom. We've got the big sell-off yesterday, and we've had this before where crude oil sort of like all of a sudden turns around. And today, it's sort of presented with a decent risk-reward trade to go long, because we've had 2 occasions where it has held at this level. So I'd really like to see what it does at this level first. But with a gun to head, we've got to take it as that is support. Support should hold. So price action on the hourly chart looks a little bit like a bearish flag. So there is a potential for that. However, from a risk reward perspective, oil still seems to be not sort of like dropping off aggressively enough. So the momentum seems to be to be buying dips at these levels. I know Taff, who left us last week, was a bit of an advocate for this. He does believe in this oil story. So let's try and see what sort of risk reward we can get out of this. If we put the stop in quite a nice level there, it leaves us, we've only got till 9 o'clock today. So risk reward on this is nearly 4. Let's make it 4. Oh, I can't do that because that's the price we're entered at, 44.44. There you go, 4 to 1, all the 4s. Getting long here, stop at 76.44, which would be a new low on the day, and targeting a move to 81.44. So quite a fair way to go. But again, if we look at the RSI, we've had a bit of a crossover here, and it looks like we're bouncing away from the oversold scenario. So I'll get that posted up right now.
Thank you very much, Steve. I'm doing exactly the same now. So those ideas will be up on our profile very quickly, and if anybody wants to follow their progress throughout the trading day, please feel free to do so. Okay, so later on today we do have some data out in the form of the German IFO index or IFO index. That's due at 9 o'clock UK time, and then we're pretty much settling into the US Thanksgiving holidays, so it could be quite a quiet day. Tomorrow not tomorrow, so tomorrow's Black Friday, so again typically the US people take off Thanksgiving, obviously, because it's a holiday, and then they'll take off the Friday as well. I think it's a half day in markets on Black Friday. Is that right, Steve? Is it?
Yeah, I think it will be. Yeah. And tomorrow will be pretty quiet as well.
Yeah, absolutely. So we don't really have anything high impact until next Thursday, which is the US ISM Manufacturing Index, and then we're swiftly following up with the non-farm payroll numbers on the Friday. So yeah, let's see what today brings. It could be a quiet one. So do be careful out there if you are trading, and yeah, don't force it, because it may be a day where just not a lot happens. But things can change very quickly. If there's anything coming out of Europe or other market moving events, then obviously you'll see that in the charts. Okay, that's it from us today, Steve, unless you've got anything further to add.
No, be careful out there, everyone.
Yes, indeed, and enjoy your turkey if you're watching from the US, and we'll see you
Yeah,
tomorrow morning.
exactly. All right, cheers.
Bye bye.